Okay. So the first joke, and by the way, there are a total of three. Why was the tomato in trouble with the bank?
Why was the tomato in trouble with the bank?
Because it needed to catch up on its payments.
Good one. Good one. Okay, number two.
What's another name for long-term investment?
What's another
I haven't
name
yet.
for long-term investments?
A failed short-term investment.
Oh, I don't really get that one, but
Me either.
I'm not really good with these. Okay, number three. It was a good one. It was a good choice.
hmm Why don't investors play hide and seek?
Why don't investors play hide and seek?
Because good luck finding a market that's not already volatile. That's not already volatile.
Hey, come on, good word too. Volatile.
Yeah.
Thank you,
All right.
customer. Awesome job.
I'll give the mic to Dad now.
All right, let's do this. So today I'd like to introduce my friend AJ Brown. And I've actually been aware of AJ Brown for a long time. He's when I was in my covered call days, he was sort of the and he's probably still is the go-to guy. And especially what I really liked about AJ Brown was his, or I'm speaking to him in the third person, he's right here. To you, AJ, was how you had those scanners for for let's say affordable stocks, the smaller price stocks, which is really great, coming into it. Because all the other scanners I saw, and everyone was always talking about the bigger priced stocks. So
Yep.
that's when I first ran across you and all your goodness. Tonight he's going to share a super cool trade that I've seen part of, but the part I've seen is right up my alley. And is he runs real quick about AJ. He has a great site, he has great resources, and he has a great Friday show that he runs that I try to get in on. And he has a host that looks exactly like Brad Pitt, right?
True.
What's his name?
Cyprian, he's got some good Greek genes in his facade.
Yeah, but it's a really fun way to spend Friday morning, and really good. So that's where I saw this trade actually when he started to explain that. So I'm going to hand it over to AJ
Great.
and take it away.
All right, let me start by sharing my screen. I've got some actual charts. I think I mentioned if you just came in, we are getting a setup for this right now. So I've got a couple of slides, but I've also got we'll do some actual stuff on some charting platforms so that I could show you what this trade. This is what I got nothing better, no fancy names for it. This is a dual vertical on the VIX. This is when fear plays, right? And let me make sure I've got my chat open. So if you guys want to do any sort of chat. I should be able to come at the end. And I was telling Dad, I double booked myself. So right at the top of the hour, which would be 6 p.m. Pacific time, my group is looking for me to do a demo on our new software release. We're releasing a new options lookup tool and analysis tool. So I will be kind of this is generally this dual vertical VIX play is something that I usually do about a 3 hour presentation on. So I'm going to kind of compress it down into about the next 55 minutes. So I'll try to get all your questions, but I'll also give you a way. To get a hold of me if you want to talk about it more. So, what if market fear could really become your most reliable ally, right? Because most traders panic when there's some volatility building up. And instead, with this type of hedging trade, is what I call it, you're going to be positioned to get paid every time there's a blow up in the market. And if we take a look at the VIX, you'll see just in the last like 45 days, we've had two pretty big blow ups, right? So in the next minutes, I'm going to show you how to do a two spread VIX setup that by design cash flows during chaos and shields if you've got other positions in your portfolio, it shields those positions when sentiment shifts, right? That's why I call it a hedging trade. At the end of this presentation, you'll know my near-term VIX hedge trade that turns these volatility spikes into predictable, repeatable profits. Now, I've got this trade whenever I get a signal for it. I have this trade on all the time. The thing that changes is my position sizing. And I'm actually, because of what the market's doing right now, I'm at the higher end of my position sizing than usual. So I'm putting about a 15 to 20% of my portfolio into this hedging trade every time it cycles. So the other 80% of my portfolio I've got working with me because I like to sell premium. So I'm selling a lot of options premium, but I put a good chunk of my portfolio into this particular trade. And you'll see, a lot of times when we do risk management and position sizing, we look at the worst case scenario. But because this is a VIX and not a stock, an index, or an ETF, right? The VIX has an interesting kind of um, attitude to it. We'll talk about that in a second. And a lot of you probably already know this stuff, but let me go through, by the way, the reason why I've been going out and talking about this trade, because I keep running into people, especially when I do presentations, especially when I do live presentations, they will stop me afterwards and they'll say things like, and I'm just going to repeat a couple of these. I got a bunch of these that I just recorded on these slides. I don't actually have a real strategy. I keep Frankensteining ideas from different presenters and hoping they add up to an edge. Chasing alerts and guru calls because I don't trust myself to read charts. I keep breaking my rules or never really have rules to begin with. By the way, I'm like very disciplined where I follow things like a blueprint. So uh, when I hear about breaking rules or not having rules, it gives me a little bit of agita inside my stomach. I size too big when I'm desperate to make back losses. Size too small when I need to be committing. I don't know how to pick candidates. I'm guessing. I try something new, it fails. I don't stick with anything long enough to master it. More stuff. I'm just going to pick a couple of these. I don't understand risk. I think I'm managing it, but I'm probably not. I hate that I'm trading emotionally, but I feel powerless and stuff. So I keep hearing this stuff. Uh, I even some more. These are some more that got me right. Maybe I'm just wired wrong. I panic fast and think so. When people start taking this personally, man, does that get to me? Uh, Maybe I don't have the discipline successful traders have. Maybe I never will. I mean, maybe I'm too old to finally get it. I mean, I'm 52 years old. I hope you can't get too old doing this, right? Um, what else? How about I'm afraid of disappointing my family again? Oh my God, right to my heart. Maybe I don't deserve to win. Anyway, these are things that people say to me, and here's the facts, right? Of course, there's a lot of uncertainty going all across the world, right? But what's happening in the markets, especially if played right, it will set you up for months, if not years to come. Because remember, even though the talking heads will go on and tell you that this much money was destroyed in the markets or out of 401, whatever, money, it's not created or destroyed in the markets, as you probably know. It simply is moving from hand to hand. And the real key is making sure you're putting yourself on the correct side of that transaction. That's why you'll find me often selling option premium to people rather than buying it, right? So a big disclaimer, and a lot of times when people present, they give you the SEC disclaimer. And like when people come and work with me, join my program, I definitely tell them about the disclaimer. But what I really want to make sure you know, because I've been doing this since 1997, is that some of the stuff you're seeing, and if you come to the Friday show and you follow along with some of the stuff, you're never going to do it as good as me. And I just want to be up front of that because I've just been looking at these patterns for so long. I consider myself like a goat at looking at these option patterns. So I've been eating, drinking, and breathing this stuff. You probably won't do as well as some of my long-term program participants. I just want to put that out there because a lot of people are like, hey, how come I didn't do as good as you? Because you're not me, right? So I just wanted to make sure that that's my disclaimer is you can follow what I'm doing, but I know the little nuances and stuff just because I've been doing this for so long, right? This is how I support my family. We were talking, Boomer Dan and I, I've got myself, even though I'm 52, I've got a little 4-year-old. She just turned 4 on Halloween, and I've got, my big family, my big Italian family, and so they all rely on me to make sure because I haven't had a job, which I've always used to think was an acronym for just over broke. I haven't. Last time I worked was 2005. I've been living off my portfolio since 2005. Anyway, let's talk about this VIX trade, right? So the VIX, as you probably know, and if you don't, that's good too. It measures implied volatility in the S&P 500 options market. Well, that's a bunch of mumbo jumbo, right? Here, let me distill it down even better. It represents the market's expectation of volatility over the next 30 days. It's often referred to as the fear index. So let me bring up my chart. I don't even want to stick on these slides for so long as I want to bring up, and I'm going to bring up the VIX, and I'll get rid of some of my indicators, make sure I've got the indicators I want. So if you think about this, right, this is a measurement of, I'm going to simplify this, but implied volatility is calculated from options price. In other words, people, investors, especially what I call the market movers, these are the small percentage of the people with the biggest pocketbooks, mutual fund traders, hedge fund traders, pension fund traders, they're like big, giant oil tankers, right? Little investors like me are like little tugboats, right? We can make quick decisions. We can use stop loss orders and liquidate, get into a safe all cash position. They can't make those big of a moves often. So what they do instead is use options as hedges. And a lot of people think that options are, risk, but these people think it's the opposite of that options hedge them against risk, right? They provide protection, right? So what you'll notice is when folks perceive, and that's important, that something in, market moving is coming in the not too distant future, they're going to load up on options as hedges against their long and short positions, right? And so that drives the option prices up, right? And that drives the VIX up. That drives implied volatility. It's a perception. And I actually have this limit that through watching this for so long, right? There's a limit at $26. I call it the founded, unfounded fear threshold. Founded, unfounded fear threshold, right? And that's usually because under $26, people may load up on these options because they perceive something is coming. But a lot of times, it's just like it's the way human beings are wired, right? We're wired in order to be ready to handle an emergency in the shortest time possible, right? Maybe it's back from when we were cavemen having to chase that woolly mammoth when it finally appeared, right? We're not wired to be, confident and secure, and that's really how the VIX is laid out if you look at it. So if I look at all the data this is Charles Schwab in their Thinkorswim platform that we're looking at right now. If I go back and look at all the VIX data, their VIX data starts I believe January 1st, 1986, and I draw a linear regression line, otherwise known as a best fit trend line. You'll notice it's horizontal, right? It's not like a stock, an index, an ETF that goes from the lower left to the upper right over time. This is because our anxiety is even though we've got peaks and troughs, it pretty much goes sideways. This is not, a lot of people think that this dotted line I drew was just a horizontal line. It's not. It's a best fit trend line, right? Linear regression line for those of you that remember your statistics 101 from back in the day, right? So now if I zoom us back into the current time, again, what you're going to notice is this is roughly coming in at about $18.90. That's our mean of that line. And so about $7 above that at $26 is where, people will boost up and start buying options because they think something big is coming, and they'll drive the price of the VIX up. But until it gets up as high as $26, a lot of times those fears and those reasons people are buying options to hedge themselves turn out to be, stuff that comes and goes and is soon in the rear view mirror. And the next thing you know, they're trying to sell off those hedges and kind of reclaim some of it's an insurance policy, right? Same thing with confidence, right? We never really get that confident. We never really go below $12. I can think on two hands since 1997 the number of times that the VIX has actually gone into single digits, right? Um, it doesn't happen that often. In fact, again, if I go back, let's just go back 10 years, right? You will see over the last 10 years that very rarely do we get that confident. But then I also want you to notice, looking at the VIX, that when the proverbial poop does hit the fan, look how fast the volatility spikes. So again, the mean is around $19, but you never see spikes in confidence, right? And again, those folks out there who have studied psychology, this probably jives with you more than us that are into like math and science, right? But humans just don't get that confident. But when things go off, like we're ready to act, right? We're ready, whether it be as simple as, hey, let's go ahead and insure our position to, we're ready to jump at an emergency. We're wired that way. And that's how the VIX is. And so that's why when a lot of people are talking about, when I do this VIX trade, position sizing, I don't quite worry about the double vertical falling off of the cliff in the wrong end because when we get confident, it's over a long period of time and it's very, um, uh, very deliberate how the VIX drops. But man, when, whether it be the mention of a tariff or it be the mention of, hey, I'm not going to be friends with China anymore. We're going to raise our tariffs against them. Whether it be a mention of an interest rate, boom, the VIX is up, right? So we want to architect a trade that deals with that, right? So that's kind of a primer on the VIX. Low VIX levels signal confidence and complacency. High levels signal fear and uncertainty. And you can kind of see how that's balanced differently. We spend a lot of time over time down in the lower range, but when the proverbial poop hits the fan, man, we spike high at a moment's notice. Okay. So markets are driven by human emotion. Fearful markets cause investors to seek protection, driving up prices and the VIX. Confidence builds slowly, so the VIX rarely drops as sharply as it spikes. This asymmetry creates an opportunity. Volatility tends to rise faster than it falls. And I'm talking about implied volatility, right? Now, I wouldn't doubt that most of you are into some sort of options, but you can't help but hear in your head, especially if you're talking to somebody who only has a little bit of experience or even just a little bit of exposure, they always ask me, aren't these things risky? And I would say, like I was hinting at earlier, the market movers, no, it's the opposite. Because, if you're just trading the asset itself, you usually only have one way to trade it. Buy it low, sell it high, right? Go long the stock, the index, the ETF. You might be able to go short. That's, sell to open and then buy back to close if you've got, the account set up correctly. So now you have two strategies. You can make money if the asset goes up or make money if the asset goes down. But a lot of times the asset goes sideways. And with options, right? Last time the mathematicians looked at the different ways to combine, multi-leg strategies, more than one option. And also just the fact that if you pick an option that has a different strike price or a different expiration date, you can get a price behavior that's way different than the similar option with a different expiration date or strike price. So there's so much variability that there's like 27 different ways you can profit from patterns, whether those patterns be in the price of the underlying asset or whether it be time passing by. Because options can profit on time passing by. That's my favorite way to profit on them. And options can profit on fear and uncertainty versus confidence, right? So there's so many ways, and it's one of the reasons why in 1997 this was what attracted me. I wanted to have a tool chest full of so many different strategies that no matter what the market was doing, I'd have a way to figure out how to profit off of it. So it's the opposite. Now, I did want to mention to you a couple things about me so you know who you're working with here. I founded a company called Trading Trainer. You can find us at tradingtrainer.com. Back in 2003, they call me, I think my peers call me the world's most disciplined options trader. I think behind my back, they call me the laziest options trader. That's because, well, I think of myself as the most efficient options trader, right? The reason is because I'm an end of day trader. I definitely don't like to be there during the hours that the market is open. In fact, for the longest time, I would have folks that whether they be, I had a couple cousins that would trade on my behalf during the trading session. And then when they didn't want to do it anymore, I hired a couple of folks out of the Philippines that handled my account. And now I simply program conditional and contingent trades in these different platforms that allow you to get, granular with that, like TradeStation or Thinkorswim. Or we're actually at Trading Trainer coming up with our own system that interfaces with different brokers so that you can just program in what you want the night before and then let it run, right? And so I consider myself quite efficient because I like to spend my day, with my toddler, right? I like to spend, she's not a toddler at 4 anymore. I keep calling her my toddler. She's not a toddler anymore. I like to spend all my time with her. One of the things that I've been doing recently is in my late 40s, I decided to walk into a circus school. So I've been learning how to do trapeze, right? And so I love doing trapeze. So that's what I do during the day when nobody else is at the circus school because they all have day jobs. I'm getting all these private lessons, right? I've been doing this thing since 1997. I've been publishing my daily insights to my participants since 2002, every evening, Sunday through Thursday. There's an ebook out there that I published in 2005 that you'll find on a lot of successful option traders' computers. You might see my home study course that I put out in 2008. That's been a seller, for all these years. But I want you to realize that I'm actually a learner, just like all of you. I got some degrees in the early 90s, a mechanical engineering and electrical engineering, and then I got a master's degree in the two of those. In theory, I was supposed to go off and uh, do the Tesla full self-driving or do the automatic pilots that these autopilots that these airplanes fly with. I never really did that. Instead, I went into business, and so I got a strong commercial background. When I left the job force, I was working at a high-end role at Hewlett Packard in Silicon Valley. And in the last 15, maybe 17 years, I've really been focusing on how to be the best teacher because I actually hired some folks who were traders. And I knew they were good because they'd show me their portfolio every day and they'd show me how their portfolio was growing and they'd show me the actual trades they were doing. But man, I'd look over their shoulder and they could not convey to me, what they were thinking and what they were doing. And so if you can't teach somebody what you're doing, it was a waste of my money to look over their shoulder. So I don't want to be that person. I want to be able to teach. So I've been focusing on that to make myself better. That first year in 1997 when I started, man, they had like WebEx, but that was only in a corporate setting. You had to go to a hotel. Some of you might remember this. I used to sit in you'd go on a Saturday for a half day, and then at the end of the Saturday half day, you'd wind up shelling out money, and you'd come back for all day Sunday, and then you'd shell out a lot of money, and you'd be on a plane for 3 to 5 days to hang out with these people. I spent 27K on seminars, and then trying to do what those folks were teaching me. I wound up giving 85K back just in 1997. And it's funny, 85K, 27, that's more than I spent on my undergrad and graduate degrees in engineering at University of Virginia and University of Arizona. But at that time I was living with a couple guys in Silicon Valley sharing the rent. I had a 6-figure job at HP. So I wasn't actually, it was okay, right? And now, with a family and a mortgage payment and everything like that, maybe that wouldn't be okay. But learning by this method, this trial and error method, was probably okay then. But let me give you some pointers. If you're like trying to figure out this whole trading thing and you're not yet dialed in. Number one, stop chasing shiny objects, right? Settle on one type of investing. For me, it was option trading on equities and indexes. Settle on that one thing and learn it really well, right? It's so easy to there were binary options, forex, everything. There's always a trend, crypto, and people are always like jumping from here to here. Just pick the one thing that, when you're picking that one thing, pick the thing that's going to fit not just your dream lifestyle, but your lifestyle right now. For me, like I said, I was really busy as an executive at HP. And so what worked for me was end of day trading, right? And so I couldn't do things during the day. So I had to figure out a way to make that happen. And I wanted to be able to trade whatever pattern was happening, whether it was like .com boom, .com bust, energies, housing. I wanted to be able to make money in all those different ways. And that's why options was what I did. But that's me. You do you, but pick something and then stick with it and master it, right? Number two, hire a mentor and hire somebody who's currently doing what you want to be doing and more importantly knows how to teach. I already told you my story. And if you're learning, trial and error is so long. I didn't have my first profitable trade for 3 years, and then I didn't really get into the groove until 2002, right? And so that's 5 years of just wasted trades, right? That's trial and error. Guided discovery, right? Getting that mentor who can teach you will save time and money and frustration, and it'll make things happen just much faster. So that's my second thing. Third, get yourself into an investment group, right? Look over each other's shoulder. And at HP, we called this leveraging with pride, right? When somebody would release a printer like Epson or Canon or something, we would buy that printer and bring it back to our laboratory and take it all apart and then figure one piece of it that we can incrementally improve and then do that and release a new printer, right? That's called, my little one's already, when I go to pick her up from school, they're like, well, she was looking over somebody's shoulder and we told her not to copy. And I said, but that's how we incrementally improve. I call it leveraging with pride, not cheating. But I think that's what, if you're in an investment group and you see, Mark, or you see, whoever it is who's in the group with you doing a great trade, do that trade too. They don't own it, right? Leverage with pride, get in there, do things and share what you're doing too, right? And last but not least, also surround yourself with like-minded investors who are going to celebrate your wins as well as, let you know that, hey, we all have those losses and it's okay to continue. You don't want to have a naysayer telling you that options are risky and making you give up on yourself. Okay. So I hope that is helpful. Let's get back in. Oh, gosh, I promised Boomer Dan I would do this. My big thing these days is, and I actually started this in 2003 as well, but it's grown up huge, is I take historically underserved inner city kids off the street and I teach them how to invest. And when I first started out in 2003, these are actually the kids. We had 9 kids in a suburban, not a very nice one either, kind of a rough one of Denver called Aurora. And these kids, now one of them is a professor at DU. They all, I gave them each 2,000 of my own dollars back in 2003, and I wasn't sure I'd ever see that again. They all paid me back, bought themselves computers and at that time DSL connections, so that they could do this on their own. So I've been doing this ever since. We did have to take a break during the pandemic, but we're back at it. We've partnered now with the Chicago Board of Options Exchange. They happen to have a lot of free space now that there's so much electronic trading happening. They don't have the open floors like they used to. You go to the CBOE building in Chicago and you just see a bunch of people in front of computers. So they have good classrooms. We've been putting our material in there, and they've been getting some kids off the south side. Last year, we graduated over 120 kids. Hopefully in 2026, we'll have another 9-week program and get those kids rolling as well. So this is what I like to do. This is why I run Trading Trainer. We don't take any money from Trading Trainer. We just put it into this program here. For myself, like I said, I live off of my own portfolio. So wanted to mention that because that's kind of cool. If you want to learn more about me, just go to links.tt, which is short for Trading Trainer, links.tt4.me. You'll see all my socials there. You can join on the YouTube show on Friday mornings. That's from 11 to noon Eastern. So that would be 11, 10, 9, 8 to 9 Pacific. If you're not in any one of those time zones, I'll let you do the extrapolation. We also have a bunch of freebies. You want to get my indicators. You want to get see one of my workshops on premium selling. All of that is at links.tt4.me or links.tt4.me. You might want to write that down. Okay. Let's get back to our hedging trade. So we're going to pair two bull vertical spreads, right? A debit spread and a credit spread, and we're going to do that on the VIX. They're going to, I wrote here that they're both entered simultaneously. Actually, lately I have been legging in. So I put the debit in place, and then sometime during the day or maybe even the next day, after some appreciation in the VIX, I will go ahead and get a better price on the credit. I'll either get a better price on it, or I might be able to bump it up some strike prices and create a bigger or bump it down in strike prices, create a smaller range where it will break even versus go ahead. The expiration on this is typically 2 to 5 weeks out. The one that we're looking at placing right now, we'll probably use the December expiration, or we might use some weekly options and go 1 week past the December expiration. When I say December expiration, monthly options expire on the third Friday of the month. So that's when I say December expiration, we're talking about the third Friday of December. But we also have an option expiring on the fourth Friday, and even one that's coming around that's on the first Friday of January. So 2 to 5 weeks out, and the goal of picking these two spreads, and I'll show you with some real numbers here, is to offset the cost between the spreads, right? So whatever your debit costs is how much you want to collect in the credit, right? So that what happens is if the trade stays in the range between the two spreads, you break even. And I kind of like to make the credit a little bit more so that, your commissions are covered, and or you might, depending on how many contracts of these two spreads you do, you might have a little bit of, last month I took my wife out for an Airbnb in the Blue Ridge here outside of Washington, D.C. We went and stayed for a weekend there. So you might get a little like small paycheck, right? So that's kind of the idea behind placing these two spreads is if it stays in that center zone, great. It's a break-even trade, and maybe you'll get a little bit of extra, pay for your commissions, pay for a nice dinner, pay for a weekend away, whatever. So that's the idea, and most of the times that's what this trade does, right? So let's take a look one more time at the VIX. So you can see right here, because I was talking to my program participants. Let's come back to, say, a 3-month chart. We were talking to my program participants just last night about this because we've got a signal forming, and I'll tell you about the signal that I use because you want to do this when you're coming off of a bottom and you get a confirmed bottom of the VIX. That's the best time to at least get that debit spread in place and then think about putting the credit spread in place to the top side. But we were looking at a 1550 1450 spread, and then a 2050 1950. In fact, if we take a look over here, at we were looking at two different scenarios, the 1950 and the 1450. So here's the one spread, 1450, 1550. That's the debit spread. And then the credit spread was 1950, 2050. We also were looking at this other one, 1560, 2019, but we actually last night decided that we liked this one a little bit better. And you can see the debit was going to be 92 cents. The credit was actually in this case a little bit less by about 4 cents, 88. We could actually tweak that and look for one that gives us a little bit more. Let's take a look at that risk profile. So again, this is the VIX down here. Let me bring up my magic marker. It'll load up in a second. That it'll allow me to draw on the screen. But we talked about how the VIX stays in this range, right? And unless something happens that causes a volatility spike, and we'll go back and we'll look at this 1550 to 1950, or if you use the top end here, 2150. But if the VIX is in this range, the trade winds up being, break even. The two ends cancel out and you wind up with whatever the difference is between the credit and the debit. And again, you try to make the credit a little bit heavier than the debit. By only a couple pennies will pay for your commission. So most of the time the VIX is staying between this lower range and the upper range. And the worst case is if it goes down. But again, let me overlay this. This is the market becoming very confident. I don't know if I can spell the whole thing. Us people with engineering backgrounds, we don't write much. Then you come over here, and up here is the market getting fearful, or the anxiety kicking in. And we saw on the VIX what happens, right? Confidence only gets so confident, right? And fear. So in our case, if we were looking at the 1550 being the lower threshold and 2050 being the upper threshold of that kind of break-even zone, going below 1550 would be, where this trade starts to get into hot water. And I'm not worried about that happening, right? Whereas going above 2050, all of a sudden, this vertical spread strategy goes to max profit. And it could be as much as 4x, 5x the initial investment, right? Which is whatever the margin requirement is, or the debit, right? That dollar. This thing could pay, some really nice change. So every time we get a spike, you could actually close the position. You don't have to wait for it to expire. If you're trading up here, at 26 bucks, and you've got something where the vertical spread is down here at 1950 to 2050, this thing is going to be pretty much at max profit. There's no reason to wait for it to expiration. You can go in and close that position down, unwind both of those debit spreads, and then wait for the next signal. So it's actually quite a straightforward trade. Again, lately I have been setting up the debit and then coming back, even if it's just a couple hours after there's a little bit of appreciation of the VIX, doing the credit right after it. But it's just placing those two trades and allowing them to be your hedge. And again, a lot of the times you place this trade, and if the price of the VIX is in that range when you get to expiration, then it's a break-even trade. Great. But when you have these moments like we've been having over the last 2 and 3 months, where you go to max VIX, right? That's when these things all of a sudden, and that's when a lot of the positions in your portfolio are actually possibly, going against you, especially directional positions. It means that there's so much uncertainty. And so you want this trade to actually be profiting 3x, 4x, 5x, because, maybe some other positions in your portfolio are not doing well. That's why we call it the hedging trade. Okay, so we look for signs of a market bottom before entry. Our signal is the fast MACD. So this is nothing, by the way, this trade is nothing, this is a trade that's been documented many times over. It's not anything special to AJ Brown. And neither is this fast MACD. If you talk to the Appel father and son team, Mr. Appel came up with the MACD back in the day, and his son continues, and they've got like 5 guys just constantly, like mathematician guys, constantly working. So I was listening to a presentation of theirs 12 years ago, and then wound up going to their laboratory and looking over their shoulder. And they, the traditional MACD, if you add a MACD to your chart, it's going to be what, 12, 26, and 9 is the settings, right? 12, 26, that's the 2 EMAs that they subtract from each other. And then the 9 is the MACD average. But they said, hey, on faster charts, we're using the 6, 19, and 3. And so the 6, 19, and 3 is what we're using to identify bottoms in the VIX for this hedging trade. So it's just the fast MACD. You can see I've got an indicator that you can go download for free if you'd like off of that quick links page. You can also just simply put the MACD on there, and you give yourself a 6, 19, and 3, and then plot that guy. And that works for you too. You don't have to have my indicators. But if you do have my indicators, you'll get the arrow. The other thing, just in case you want to come download those indicators and use them, and right now I just have them on Thinkorswim. So if you're not using Thinkorswim, then you can program in your own or just use but I made it so that you could use different seeds, right? The traditional MACD is done on the closing price of the bar. I like the ability to be able to do it, for instance, to take into true range, high plus low plus close divided by 3. And I use this indicator in some of my other strategies. And if you've got volume, like on a stock or an ETF, calculating this on VWAP gives you a little bit of volume validation. You won't get a signal if there isn't a lot of volume backing the trade. So this is something I threw into our version of the indicator. But again, you can just go into a traditional MACD that you get on any charting package and just change the settings to 6, 19, 3, and you'll be able to get the same signal. And I use that as an end of day signal. So yesterday I got an end of day signal, and then I programmed in some trade rules. I like, you might want to write this down. I like price. First of all, I don't like my trader, my bot, if you will, to start looking until the afternoon session, because there's just so much stuff happening in the mornings these days. So I wait until about 1 o'clock Eastern time, New York City time, and then the bot kicks in, and it looks to make sure that price is above the confirming day and previous day closes. Nothing special, just, hey, is it above yesterday's close? Is it above the confirming day close? And I also, a little day trader's trick that I used to use was looking at the first 30 minutes of the trading day. There's a high and a low, and we would call that the open range. So I like to make sure I'm above the high of the first 30 minutes. I like to be above the open range on these. So today we didn't get any of that, right? We weren't trading above the open range. We were trading above yesterday's close, but we weren't trading above our open range. So my trade didn't fill today. So I'll be looking again to trade and get it filled tomorrow. But these are just ways that I make sure that my signal is followed through, right? And how I continue being a disciplined end of day trader. So I'll be looking for that again tomorrow and getting that debit spread in place and then coming back. And a lot of times I just manually put the, when I find out that the debit spread is filled, I will come back and manually and look for, the best opportunity to do the credit spread. Let's see. This strategy activates when volatility appears poised for re-expansion after compression. By doing this at the bottom, it avoids premature entry into ongoing sell-offs. Here's the expected outcome. Most of the time, trades result in near break-even or modest gains. During market panics, when implied volatility spikes, this trade pays off significantly. It acts as a hedge, so the gains from this trade often offset losses elsewhere in the portfolio, and it provides just peace of mind and smoother portfolio performance during high stress events. And man, just take a look, if you will, I got to throw up the SPX just since the end of September. I use a retracement analysis that you can see here. Let me turn off this MACD. But man, my retracement analysis, which I always use as kind of a broad market Bible of how to, how to trade the market. From April when we had the whole tariff announcement till about the end of September, we were on a tear, right? People were trading directional strategies. Swing trading was working. You had a good 6 months of good trading. But then as soon as we started, I mean, we've had trend changes, 4 of them in just the last 2.5 months. I mean, when you see that, that's telling you sideways chop. That's telling you when you see the VIX starting to trade $1 or $2 above where it was trading before, you're starting to see uncertainty. You start to see the price of gold going up again, and you realize people are on edge. We had this whole government shutdown and we can't get economic news. Even the Fed has been telling us that they're flying blind. We're flying blind. We're basically from every tweet or whatever it's called. It's not a tweet anymore. It's like an X post or Truth Social post. We're seeing the markets go one way or another. I mean, this is the time that you want to have that VIX hedging trade in place. As we've seen over the last 2 months, this VIX hedging trade has profited big time for us, and why I'm talking about it so much, that more than I usually talk about it. And also, like Boomer Dan and I've been talking about, this is also the best time to be selling options premium, right? This is trading directionally or trying to trade leveraged options, buying leveraged options is kind of, talk about risky. That's where we're at risk right now. Now you want to be selling to those people who are hedging their portfolios, and that's where I'm finding the money's at, right? Okay. Let's see what else I've got to say. Provides peace of mind, why it works. Volatility is inherently mean reverting, but spikes sharply in crisis. Fear reactions create short-term mispricings as option premium that we take advantage of. Our structure captures these short-lived surges while minimizing our cost exposure. This makes the trade an efficient portfolio hedge, not a speculative bet. So some takeaways. If you were to summarize this whole presentation, it's a measure of market fear versus confidence. That's what the VIX is. Our proprietary. It's not, I didn't make that slide, but the VIX hedge trade uses a dual vertical setup to exploit volatility behavior. We use strategic timing. We like to use the fast MACD confirmation. That's an end of day signal with subsequent day follow through. That enhances our edge and our consistency, provides a built-in safeguard for premium sellers during anxiety-driven markets. So if you want to take advantage of this, because my program participants and I do this, we talk about this hedging trade at each one of our workshops. Hedging trade at the next signal. Just come to the workshop, get the specific strike prices for the vertical spreads that we're thinking of using, get the specific timing signal. We always have trade reviews, so you can send us the trade for review before you do it. Send it the night before. Place the conditional or contingent trade using your brokerage platform. Rinse and repeat often, right? So Boomer Dan said I could tell you a little bit about my program, so I'm just going to go that really quick, if just in case it might resonate. How would you like to never miss a pick? Minimize the amount of time you spend away from your loved ones or your career or whatever it is, your pickleball tournaments. If you want to go join the circus with me in your late years, more power to you. And what if you want to have support whenever you need it? Because that is pretty much what I think it's all about. It's saving time, creating clarity, and getting the results, right? Would it be okay if I take a couple of moments to tell you a little bit about my materials, my training, and my tools? Maybe they might be a match. So you can let this be interesting, or you can let this presentation be transformative, right? Because a lot of folks will watch this presentation and they'll do nothing. right? They might take a couple of the tidbits, try to make it work. It keeps you exposed to volatility spikes and randoms. Or if you want to work with me a little bit, you'll start using a structured hedge that pays you when the markets get emotional, right? So do nothing, keep getting the same results. Work with me, install a reliable rule-based hedge that works every month. This is for people who don't want to pay for multiple data subscriptions, wants everything they need in one place, doesn't want to miss any opportunities, wants to spend more time doing other things, doesn't want to do this alone, wants step-by-step instructions, consistent, reliable results. I'm going to skip Charlene's story. Charlene was amazing. She got sick, got cancer. She was a teacher. I think teachers are the most um, appreciated profession out there. She was in the classroom, and she, with her chemo and radiation therapies, was getting really weak. So they made her leave. She hadn't gotten her retirement yet. She wound up surviving, but she was also disabled because of the cancer treatments. She got involved in selling premium and keeping her portfolio safe with the VIX trade, and she's still a, a very, this was years ago, but she's still a very prolific person in our program. Um, so there you go. That's her story. So you come work with me. This is what we're going to do. We're going to do an onboarding call, and then you're going to go to our screener. We've got all sorts of software we have running. You're going to pick a symbol in your price range. Bring your symbol to the workshop, and you're going to submit it to us. Our next workshop, by the way, is Thursday evening. We're going to plug that symbol into the worksheet, and you're going to do it at the same time. Our workshops are interactive, so you're going to plug it in, and you're going to put your portfolio specifics, because our little worksheet tool actually will do a risk analysis based on the size of your portfolio, your risk philosophy. Are you aggressive or are you more of a belt and suspenders person? And also your risk appetite, how much. And for options trades, can I just put it out there? You should never, ever be risking more than, I say 2%, but the max would be 4% of your portfolio on any given trade. I've seen folks, especially with vertical spreads, risking like half of their portfolio on a vertical spread because they think it's so cheap they could buy a whole bunch, but they don't realize the risk they're taking on. So you always want to know what's the worst case scenario, what could you lose, and limit that to 2 to 4% of your portfolio max, right? You plug that symbol into your worksheet. It'll tell you how many contracts you can buy and all of that good stuff. You could send us that trade. One of the biggest things we have in our program is people send us trades for trade review, and we turn those around and let them know if they're missing anything or, because we want to look over your shoulder, right? And then you trade the trade. And if you don't, you're not confident in actually trading the trade right now, paper trade it. That way you get the experience, right? Prove it to yourself. So that's how we're going to get you your first winning trade in 7 days. And then we're going to rinse and repeat often. So we got tutorials. We've got lecture series and all of their replays going back to 2008 when I started the premium selling program. We've got the screeners, the planning tools, the workshops, the interactive live workshops. And if you miss them, you join the replay. We got the trade reviews. So what is that worth to you? Because we also have a double your money back guarantee. Now, I'm going to do the same thing that I do with our inner city kids. I want you to work with us, even if, you're done with the actual learning part of how to do all the options and premium selling. I still want you to continue on with us for 6 months, right? Because you come to those workshops, right? You'll come and do the trade reviews. We can look over your shoulder and, make sure what you're about to do is legit and that you're not missing any details. So do the program for 6 months. It's not going to take you 6 months to learn how to do the VIX trade. It's not going to take you 6 months to learn how to sell premium, right? It's probably take you 2 or 3 weeks max. But I want to be there so that your first 6 months of trades, I'm making sure that, you're doing them right, right? Because perfect practice makes perfect, right? It's not just practice, because if you practice something wrong, you create a bad habit, right? So perfect practice. So I want to be there for your first 6 months. In 6 months, if you're not making money, I'm going to give you back what you paid on my program times 2. It's a double your money back guarantee. I'm also going to give you a strategy session. I always give a strategy session with our coach. We have a program where we actually will hold your hand through this. It's kind of a done for you program. So we've got some coaches so if you don't want to just join into the workshops once a week, if you want to actually have somebody working with you one-on-one. So I'm going to put you up with one of those one-on-one coaches just for a session, a single session. Talk about, where you are, where you want to be. They'll first of all check you on that. It turns out most people where they expect to be in 6 months is underestimated. So they'll check you on that. Some people think they're going to be, they have $500 now and they think that in 6 months they'll be a millionaire. So we'll check you on that too. But then we'll come up with a plan in your coaching session that you can follow for the 6 months to make sure you hit your targets. So give you that as a bonus. And then this is a new one because I know a lot of you are trading already. We'd love to audit your trading, your process. We'd love to, and this is new, and this is only a bonus for you guys because I'm going to do this myself. Me or Coach Jay are going to do these, so I'm not going to let anybody else do these. So I can only do a few of them, especially before the holidays. So this is just for you guys on this line. We're going to audit your trading and give you pointers on, so you lay it out what you're doing right now, and we'll give you pointers to make it better. So okay, you add in the double your money back guarantee, the bonus strategy session, and now this new trader audit that I'm going to do just for you guys. Think about that value, because if you go on my website, this 6-month program is $600. It's $100 a month. And again, another bonus besides the audit. It's a flat fee, by the way. I'm not going to ask you for any more money, or there's no other charges. But again, for you guys, just on this call, I'm going to reduce that to $497. Now, I ask for something in return. When you have a couple winning trades, I'd love to get a testimonial from you. If you want to stay anonymous, then by all means, this is, but in return for the $100 off, if I'd like to get a testimonial from you when you have your first couple of winning trades. So keep that in mind. You could, by all means, like I said, anonymous, $600 testimonial, just one little couple of sentences, or 97, right? So this is what the site is. It's boomertrade.com/AJ Brown. That's my name. If you've got your phone, you can just scan that QR code. It takes you to the same place. And let me just verify, because this is the website, and I want to make sure my folks, boomertrade.com/AJ Brown. So again, if you're okay with that testimonial, you'll come down to the promo code and you'll go 100, capital D, capital I, capital S, capital C. You'll hit apply, cross your fingers that, okay, good. So it'll give you $100 off. Use that promo code, like I said. And again, it's on your honor, but when you have a couple of winning trades, you'll give me a testimonial, right? And should you have any problems with getting the website to work, because we always, especially on a Tuesday evening, you can call us. We've got people standing by. That's our phone number that goes right to our office, 970-266-8146. Our main office is in Colorado. I left Colorado about 15 years ago in order to come be close to where I grew up and close to my parents. So that's why I'm in Washington, D.C. But we still have a whole bunch of people working in Colorado. So that's why it's a Colorado number. And that's it. Let me see if you guys have some questions. I can stay a little bit longer. Here's chat.
Yeah, I don't see any questions in the chat, but if anyone else has questions out there, chime in. I have a couple I jotted down
Nice.
as we went through.
Yeah.
But out there who has any first dibs. on it.
Let me know what your questions are.
Sure. It's been forever since I traded the VIX. And I'm just curious, like what, if anything, is different about trading VIX options? I mean, they have a different expiry, right?
Yeah.
But is there anything that someone who's never traded them, but who has traded a lot of like index options or stock options need to know?
Not really. You can trade this. If you can trade the VIX trades as easy as you trade anything else. You might have to, when you sign up for your account, if you don't already have the ability to do options, you may need to call your broker, and depending on who your broker is, let them know. Um, um, let them know that you want to trade options, but you'll be able to trade the VIX options just as easy as you trade any other.
They're liquid, pretty easy to fill.
What's that?
And
Oh,
they're liquid.
yes.
Oh, I'm
The
sorry.
VIX options have a heck ton of liquidity on the weekly options. So the non monthly, so the ones that aren't expiring on the third Friday of the month, sometimes have a little bit less liquidity, but I'm able to get fills on those too. It depends again also on the size of your position. If you're trying to do quite a few contracts or even less. So there's this thing in the options market with 20 contracts. That's when you start to be able to go down to the trading floor. So if you can do lots of 20 contracts, you probably get better fills than if you're either doing way more than that or way less than that. So
Okay, cool. And then I had to step out while you were presenting with a little puppy issue, but did you talk about like when do you exit? Do you just let the thing go to expiration, or do you have profit targets and also
no,
stop losses on it?
yeah, so that's a great question. You can place stop losses, but again, because of the nature of the VIX and the whole thing about how we don't really spike in confidence the way we do in fear and anxiety, I don't use those. Um, uh, uh, but you can have those stop losses in place. Um, when the VIX surges like it has over the last couple of months, you'll find out that those vertical spreads are pretty much at max profit. Like if it's $1 vertical spread, it might be at 98 cents, 99, especially when we were up at 26, $27. You just close out, right? You go ahead and buy to close the debit spread, you go ahead and sell to close the credit spread, and you take your winnings, and you don't worry about letting it go to expiration. If it continues to trade in the middle zone, then yeah, you let it go to expiration, and you wind up, unless it's starting to spike or get close to, you just let it go to expiration, and you wind up getting the difference between those two prices that you paid, right?
Right. And in that difference, are you looking for, or what's realistic? Is it realistic to get a break even or a slight loss on that level or a slight credit?
No, so we were looking last night, we were looking at 1550 and 2050. So this was a 1550, 1450 option spread and a 2050, 1950 spread, right? I can show you as well. If I come on over here to our risk profile, you'll see that a little bit better. And you'll also see down here the actual strike prices. And over the time from yesterday to today, you can see that the price went a little bit more on the debit, less on the credit, and that makes sense because the VIX was moving higher. So the scoop is I would uh, try to pick strike prices where the credit was a couple of pennies over the debit. So maybe, or I could balance this out. Maybe I could go instead of the 1450, 1550, maybe I'd go with the 15 and the 16. Let's see if that automatically updates. It did. Now we're at an 84 debit and an 88 credit. That's ideal, right? You have a little bit more credit than you have debit, so that if it does stay in that middle zone, which oftentimes it does, you'll wind up at the end of the day with 4 pennies extra. So enough to cover commissions, enough to maybe get a little bit of money for a nice dinner, right?
Right. Cool. And then,
But now notice that by doing that, I moved my upper threshold up to 16. So now if I move this line up to 16, you'll get a better image. Let's do that. You'll get a better image of, what that means. Are you uncomfortable with having it there? Because otherwise, you put it back down to 1550 and you'll have to play around with the top one, right?
right. Yeah. And you use the signal to get in, or do you ever just put them on every month, or do you wait for that signal?
I wait for that bottom, and so I gave those folks the criteria for the fast MACD. So it's a MACD using 6, 19, and 3 for your parameters,
Yeah,
given to us from the MACD guys, right?
right. Yeah, I saw that. Okay,
And
cool.
I would totally put the debit spread on and then wait for a little bit of appreciation and get a better price on the credit spread, right?
Oh, okay. That's a good tip.
I've
Cool.
been legging into them recently. Originally, I said put them both on at the same time. Now I'm putting the debit on, letting a little bit of appreciate, especially if I've got that bottom signal, let it appreciate, and then put the credit spread on. Get a better price. Or you could get better strike prices, right? Lower strike prices on the top.
Yeah, awesome. So Mary, I got to set up a golf appointment with you. She's going to teach me golf. But she asked if we sign up for this, does it include some stock trades in addition to the VIX trades?
Absolutely. So the main part of my program, so in the beginning of each one of our Thursday workshops, we talk about the VIX and what we're doing with it. But then the main part of my whole program is how to do the option premium selling. So we'll be giving you all the tools to sell option premium, which is my main bread and butter.
Yeah, cool. And then there was a mic issue. I forgot I was plugged into this fancy mic. So can you hear me now? Can you hear me now? Sergi asked, it looks like this strategy can be beautifully coupled with Dan's VIX drop trade he discussed on his video. On the way up,
Maybe.
this strategy on the way down. Yeah, I'll have to think about that. But yeah, it could be coupled with it. I mean, it's the same sort of a thing. I really like this trade. I think too many people discount trades like this where you may go for a period of time with a break even, and then get a win. I'm moving more towards that with my trading because the break even is better than the loss, and if
You
you can
betcha.
construct trades like this one, I really like that.
Vic, Dan, I'm gonna have to run. I think
Okay.
I'm getting a message that the my program participants are waiting for me to show them their new software.
Okay.
So I
Hey,
really
thanks so much.
appreciate you having me.
I really appreciate you coming on. Thanks a lot. I learned a
Thanks.
lot. I hope everyone learned something too. I'm sure they did. And yeah, leave that up. And also I'll put the links to your link tree and your YouTube channel. Guys, check out his Friday show. It's great. Has
Excellent.
commercials and everything. Now it has AI clips.
Oh my gosh. Yeah.
Brad Pitt.
Cyprian really likes those AI commercials. I've been seeing him on his Facebook feed do those different commercials. He's getting really into that. I'm like, you didn't really do that, did you? He's like, no, no. My AI alter ego did.
Yeah. All right. Hey, thanks, AJ. Appreciate
Take
it.
care. Thanks, everybody.
All right.
Bye.